Internal Revenue Service IRS Tax News. Facts to help taxpayers understand backup withholding. IRS Tax Tip 2021-85, June 15, 2021. Backup withholding is a federal tax on income that otherwise typically doesn't require tax withholding, such as 1099 and W-2G income. So normally when we think about withholdings, we're usually looking at it from the perspective of an employee working for an employer, having to fill out then a W-4, so the employer then knows how much to take out of their paycheck for the taxes, including the income tax, and then they're also going to be reporting that on the W-2 at the end of the year for both the income and the withholding that has been taken out for tax reporting purposes. Now, the IRS typically would like to get that information. Obviously, when the employer provides you with a W-2 and takes the withholding out, when they take the withholding, they obviously pay that to the IRS. When they report the W-2, they give you a copy, but they also give a copy to the government as well, which is something that allows the government to kind of double check that you have been paid your income. They will typically make this same kind of stance oftentimes, if possible, in other areas as well. So, for example, if we are not an employee, if we're a contractor, we have a Schedule C type of business, but we work for companies, meaning we do contracting work possibly for companies, then the company will typically want to 1099 the contractor, meaning they don't have as much control. The IRS doesn't have as much leverage to basically get them to require withholdings on that type of income generally, but they do have the leverage to say, hey, you are the one that is paying these contractors. We want to double check that the contractors are reporting income to us. Since you're the one paying, we have leverage over you, because if you don't do that, then we can basically not allow the deduction or cause you problems with regards to the tax deduction, because you're the payer, meaning you're on the expense side of things and benefit from telling us who you paid. So that's usually what results in the 1099. So the 1099 is usually coming then from the payer, where the IRS still wants that information. They're going to give that 1099 to you, but they're also going to give a copy to the IRS. Now, normally they don't have as much authority to be able to say, we're going to require you to have withholdings and report to us the income in that situation, but there's some kind of exceptions for that, and that's generally where we're going to be focusing in on here. So taxpayers who receive this type of income may have backup withholdings deducted from their payments. There's a link to backup withholdings here. Here are some basic facts about backup withholding. Backup withholding is required on certain non-payroll amounts when certain conditions apply. So if certain conditions apply, in other words, the IRS is still going to require these kind of withholdings to be taking place on these types of income, where otherwise you would expect them not to have the withholdings in a similar fashion that you have on the employer side of things. So the payer making such payments to the payee doesn't generally withhold taxes, and the payees report and pay taxes on this income when they file their federal tax returns. There are, however, situations when the payer is required to withhold a certain percentage of tax to make sure the IRS receives the tax due on this income. Backup withholding rate is a percentage of payment, so the current percentage is 24%. Payments subject to backup withholding include interest payments, dividend payments, payment card and third-party network transactions, patronage dividends, but only if at least half the payment is in money, rents, profits, or other gains, commission fees, or other payments for work done as an independent contractor, payments by brokers, barter exchanges, payments by fishing boat operators, but only the part that is paid in actual money and that represents a share of the proceeds of the catch, royalty payments, gambling winnings, if not subject to gambling withholding, taxable grants, agriculture payments. Here are some examples when the payer must deduct backup withholding. So it's going to be on the responsibility of the payer here. You'll remember that the payer is the one that the IRS has leverage over. Why? Because the payer is the one that wants to deduct the fact that they're paying somebody else, and the deduction would be good for their taxes. So the IRS leverage would be, hey, do you want to get the deduction for that thing that you're paying? If so, then do what we say, right? Report the income to us so we can go after the person that you paid to make sure that they give us a portion of that money in income on their side, and or if we can level up, we'll force you to basically take some of that money out and pay us directly now in the form of the withholdings. So here are some examples when the payer must deduct backup withholdings if a payee has not provided the payer a tax identification number, a TIN. So clearly when you have the reporting information that you're going to be paying, if you're the payer and you got to report to the contractor or something like that, like a 1099, then you need their information, and that includes their ID, which could be an EIN number, an employee identification number, or if not, a social security number or something like that. If they don't give you that, then the IRS is saying, well, now, we can't really follow up on them because we see everybody as a number, not a name. And if we don't have their number, we can't really follow up to make sure that they're paying their taxes. Therefore, we want you to take their taxes from them for us and pay us for it. So a TIN specifically identifies the payee. TINs include social security numbers, employer identification numbers, individual taxpayer identification numbers, and adoption taxpayer identification numbers. If the IRS notified the payer that the payee provided a TIN that does not match their name in IRS records, and the payer does not secure the correct TIN from the payee, payees should make sure that the payer has the correct name and TIN to avoid backup withholding. So more information can be found at the links below, including backup withholding, quote B, end quote, program, publication 1281, backup withholding for missing and incorrect name /TINs. There's links to those items here. There'll be a link to this in the description.